philosophy of our global allocation fund is based on three pillars. The first one is our strategic design, which allows us to be everywhere. We invest 60% on neutral basis in global equities across developed and emerging markets, 28% in global fixed income markets, 2/3 in high quality investment grade bonds, and 1/3 in higher yielding bonds. And 12% of the fund is invested in liquid alternatives benchmarked against cash. The second pillar of our philosophy is active management all the way through. This includes thoughtful tactical asset allocation and security selection. All the investments in the fund are actively managed, and we aim to deliver excess return by fundamentally researched security selection. And the final and third pillar of our philosophy is to offer a fund which is liquid, transparent, and simple. We want our investors to understand what they get in our fund, and the fund is liquid, so we refrain from illiquid asset classes and complicated investments. And we believe that this is the way going forward to deliver the best results for our investors. So we find value in many places right now. In particular, we find value in equity markets outside of the US, so we modestly underweight US equities. The reasons are the valuations of US equities, and also we believe that the actions of the Federal Reserve may put some downside pressure on the US dollar. Therefore, we find more opportunities outside of US equities. We like emerging market equities. We think the fundamentals are there, the valuations are there, and also the actions of the Fed should support emerging markets. Within fixed income, we prefer global high yield and emerging market debt. We believe that the search for yield and the fundamentals should support these asset classes. So the neutral allocation to cash within the global allocation fund is 4.5%. At the moment, we modestly overweight this allocation by 0.5%, so it's roughly 5%. We believe it's a good opportunity to hold some cash if we find investment opportunities. So for example, if there is a correction in equity markets, we would like to quickly go and invest potentially in markets if it's not the end of the bull market, of course. So the main drivers of performance of the fund have been the strategic asset allocation. Markets have been very good for investors over the last decade, and the strategic asset allocation, 60% in global equities, 20% in fixed income, and 12% in alternatives, have benefited the fund performance. In terms of excess return or performance above the benchmark, the main driver has been security selection. Rowe Price has a long history of nearly or over 80 years of delivering results from fundamentally driven security selection, and the Global Allocation Fund has benefited a lot from alpha from security selection. Over the last 3 years, the SICAV version of our Global Allocation Fund is at the 3rd percentile in the Morningstar universe, which means that we outperformed 97% of our peers over the last 3 years. So good results. In terms of volatility, over the last 3 years, the volatility has been 6.5% more or less. It has been a period of relatively low volatility in markets.